I mean, how on earth do you decide which stocks to buy, right? There's so many options out there. There's so many people suggesting so many different companies, so many people making money, and I just don't know where to start. I just don't even know what investing is, don't even know what a stock is, have no idea how to buy one or how to start making money from it. What's up guys? Now, in the past I've read so many articles and watched so many videos about investing where people have promised to explain to me the basic principles. However, they never really did, or at least I never really understood what they were trying to say on a core level. So in this video I'm going to share with you the basic principles of investing and how to get started and how to choose stocks that are right for you. This video is going to be as clear as possible because I planned it as if I was watching it 4 years ago when I knew absolutely nothing about investing. And at the end of the video, I'm going to talk about how much money you actually need to start investing right now. Right, so maybe you're already dabbling in the stock market, or maybe you've seen the FOMO headlines suggesting how if you'd invested at the beginning of this year in Tesla or Apple or any of these stocks, you would have doubled your money. And if you're new to this world of investing, I know it can seem like you're in a maze full of numbers and time limits that you need to escape by before you're doomed to fail and lose all of your money. I remember when I bought my first couple of stocks about 4 years ago. At the time, I was working for a construction company. So I bought shares in a construction company called Kia. Also, the investment platform that I was using to invest in was called, it wasn't called Vanguard, it was called AJ Bell. So I figured, hell, I'll buy some AJ Bell shares as well. My reasoning for buying these shares was that one, I was working in the construction industry, so I was familiar with it. And I just thought that it made sense. And then the reason for buying the second one, the AJ Bell stock, was just that, well, there was no reasoning. I basically just bought it because I felt like it. I let my emotions control what I bought, and that was a wrong thing to do. But actually I got lucky, and I made some money from them stocks. But when you think about how much money I actually made, percentage-wise it probably wasn't too bad if I remember correctly, but money-wise it wasn't that much at all, because at the time I didn't have much money to start investing, and I didn't invest much in these companies. I think it was just a couple of £100 or something. Hey guys, I'm Bret Clay, and these are my key principles about investing that everybody needs to know. And I truly believe that if I'd known these principles back when I was 18 or so, before I even started thinking about investing, I would have at least doubled, probably tripled my net worth by then, because I would have invested so much more, so much earlier. But there's a couple of reasons why I didn't start investing back when I was 18 or when I was 20 years old. And the first one is that no one ever taught finance to me, especially not investing. It wasn't something that was taught to me at school, and no one ever brought it to my attention. And the second reason is that I wasn't interested in it, if I'm perfectly honest with you. I had other things on my mind and I didn't think it was an important thing to concentrate on. Buying stocks and investing definitely isn't the same as buying property, but I want to use it as an example because they share some similar concepts when it comes to making you money. Because when you buy a house, you do your research, right? You figure out how much the previous owner bought that house for, the house prices of other properties on that street, because you don't want to buy the most expensive house. It's going to be hard to sell later down the line. And you also do multiple viewings before deciding how much you think that property is worth, how much you want to pay for it. This should be the same for buying stocks, but most beginners don't do this. And it's crazy how much effort people put into getting a discount or getting a good price on things that they understand. If someone wants to buy a product that's worth maybe $100 or £100, and it's a product that they know all about, they'll spend maybe 15 minutes searching Google for discount codes for that product to get a discount, which will save them £15. But when it comes to buying stocks, people don't do this, and that's why so many people lose money. So firstly, before picking a company that you want to invest in, you need to figure out what your goals for that position, for that investment is going to be. And what I mean by this is, are you investing in that company long term? Do you plan to hold that share, that stock, for 5 or 10 years? Are you looking for passive dividend income? Or are you looking for a quick buy and sell that's going to make you money in the short term? Obviously, short-term investing and short-term goals is extremely risky because there are so many variables that can determine the price of a stock, how much it goes up or down, and basically all of them are out of your control. So unless you have a specific time frame and you're very confident in that company that you're about to invest in, I would never recommend investing short term. Now I'm about to completely contradict what I just said, but just hear me out for a minute, because this year I actually did do some day trading. But the reason was that this year we experienced a market that we've never seen before. And there were some huge dents caused in some of the world's leading companies. So I saw that as an opportunity to make some short-term gains. But as I said, that's only because of the market. What happened to the market this year due to coronavirus, not something that I would recommend invest if I was investing now or into the future. And actually saying that, if I had held all of those positions long-term and I'd kept hold of them until today, then about 90% of them, 9 out of 10, would have rewarded me very handsomely. Let's take a look at some of these. Nvidia here, for example, I bought for 358 and then I sold for 361. So as you can see, if I'd kept it, it's currently trading for $516. Lululemon here as well, I obviously got cold feet because I bought it for $292 and I sold it for $292. It's currently trading for $349. Okay, so once you've determined the amount of time that you expect to have your money invested, and longer is always better if you can afford it, then you're going to want to consider what type of company to invest in. And I'm going to divide this into three to highlight the three main different types of stocks that you can buy. The first one being individual dividend stocks, the second one being individual growth stocks, and then the third one being index funds, which can also pay dividends, but it's a collection of stocks, they're not individual stocks that you buy one of. Okay, so dividend stocks have one obvious advantage, because a dividend is a percentage of the profits that that company will pay out to its shareholders. So if you have two companies, one that pays dividends, one that doesn't, and they're basically exactly the same company, you're obviously going to go for the one that pays dividends. It's a no-brainer. It's like buying a buy-to-let house and then not renting it out. And sure, you might make some money from the appreciation of that asset, but you stand to make so much more if you rent it out. And receiving dividends is basically the exact same thing. So for this reason, when considering which company to invest in or which stocks to buy, I would always favor dividend-paying stocks. However, remember that dividends are paid at the discretion of that company, and they can at any time decide to cut it, increase it, or even decrease it. Just look at Shell, Royal Dutch Shell, who this year cancelled their dividend payments for the first time since World War II. It just goes to show, don't bank on dividends coming in to pay your rent. Obviously, it's an investment, it's risky, dividends aren't guaranteed. Now, growth stocks are individual shares of a company that don't pay dividends. And that's not because they're run by greedy CEOs who pocket all of the earnings themselves, but because they prioritize reinvesting all of those earnings to accelerate their growth. The reason I would consider buying these is because they have the potential to grow at a much faster rate than the average growth of the market. I would also favor buying growth stocks during times of economic optimism because their earnings are likely to increase and therefore they're likely to perform even better than they would otherwise. That then opens up another can of worms, which is trying to predict when an economy might boom and trying to avoid economic woes. And anyway, that's going off topic. Examples of growth stocks that don't pay dividends are Amazon, Netflix, eBay, and Facebook. These companies all present a great investment opportunity, as the past has showed, and for that reason, the lack of dividends is sometimes outweighed by how these companies might perform in the market. So the sort of thought process that I would go through is first, the company's financials. And if you want me to make a whole video talking about how to actually pick an individual stock, going through their financials and everything, let me know in the comments. That's not what I'm going to do in this video. That's the first thing. The second thing is to consider what might impact their share price in the future. If we take a look at Amazon, for instance, as well as their online retail business, they're also a leader in the cloud computing space, which I predict in the next 10 years is going to see significant growth, and they are well positioned to take the majority of that market. As well as this, they're already future planning by investing in electric vehicles to take over their delivery trucks. And these are just a couple of things to consider when considering buying a growth stock. Yeah, it makes sense. So that's covered dividend and growth stocks. And then the other type of investment to consider, like I said, is index funds. An index fund is a portfolio put together to track a group of stocks. I'll give the same example that everyone gives, which is the S&P 500, an index of the largest publicly traded 500 companies in the United States. And sure, you could go and buy all of these 500 companies individually, but that would be a massive pain in the ass, and depending on which brokerage you're using, would actually probably cost you a lot of money as well. So buying indexes is a low risk, low cost option to invest widely to invest in a portfolio of many companies. This is my preferred option when it comes to investing, and the majority of my investment portfolio is in indexes. But I'll be honest with you, it's way less fun, it's way less interesting than buying individual stocks. It's sort of the wise old man way of investing, low risk but high reward over time. For example, I actually have a 4-week-old daughter, and I'm currently in the process of setting up an investment account for her, where I'll be making monthly deposits into index funds. The reason and my goal for doing this is that obviously I'm not going to touch it for 18 or 20 years. So I'm going to leave it. I don't want to have to actively manage it. I want to let it compound and build over 18 or 20 years. So as I mentioned, I invest in all three of these: dividend stocks, growth stocks, and index funds. And I've explained my reasoning for investing in each of them. If you have any questions, let me know down in the comments. Okay, now the next thing that I do when picking my stocks is to always do it myself. And what I mean by this is don't go through a fund manager, because while the title might suggest that they're there to help you, they're the professional, trust me, they're only there to help themselves. Their job is to get paid, get their fees, get their commission. These guys basically never beat the market, and they always take their fees up front. So if you think about it, you're basically paying them to do a worse job than if you just bought a low-cost index fund. Also, their fees might not sound like a lot, but when you consider it as a percentage of your investment, as well as the loss of compound interest over time, it is a lot, trust me. All right, so how much money do you need to start investing? When I started investing, I was 23 years old, and a lot of people might say that that's young. That's a young age to start investing, but trust me, it's far too old, because the earlier you start, the better. As well, starting early and investing for longer makes it become more of a habit. And investing isn't like starting a business where you can procrastinate for years. Investing, once you've set up your goals, is quite easy, and it requires minimal effort to maintain on your side. Anyway, when I started investing, I bought a few £100s worth of few different stocks that I mentioned at the beginning of this video. And I bought these as a one-off. It was only later that I began to invest in regular intervals known as dollar cost averaging, which is when you invest your money over time to reduce the risk of market volatility. Now back then I wasn't as dedicated to saving and investing as I am now. And I think when I started investing regularly, I was putting about £50 a month in. But the more that I got into it, I very quickly began to invest more money because I changed my spending habits, and at the time I was earning £50,000. And I reduced my outgoings to around £1,000 a month, which meant I had £1,500 left, and I put all of that money into the stock market. Now there's a huge spectrum of people who invest in the stock market, and obviously all of these people earn different amounts and spend different amounts. The point is there's no magic number as to how much you need to earn or how much you need to have saved to be able to start investing, because you can invest as little as £1. Nowadays there are some awesome iPhone apps that allow you to invest in fractional shares, which means you can invest in less than one whole share of a company. So if you want to buy a share of a company that's worth £300 and you only have £10 to invest, you can invest £10 into that company, and whatever it is as a percentage of one share, that's how much you will own. I've actually made a couple of other videos looking at these apps and talking about how the interface and things work on these apps, so I'll link them up here somewhere, go check them out. So if you have money sat in a regular savings account or maybe cash under the mattress, go and start investing it regularly, either weekly or monthly. And if you don't have much in the way of savings, start prioritizing saving and investing when you get paid. Because the truth is you can start investing from as little as £1, but you're never going to build much of a portfolio if you're only investing, little amounts. You need to start taking it seriously, you need to start cutting back on your spending, and you need to start living, if you can, well below your means. If your income is up here and your expenses are also up here, think about how you can cut back on those expenses or increase that income to be in a position to be able to invest more. All right, now as well as investing in stocks and investing in the stock market, the other best investment that you can make is in yourself. And these are some books that have helped me tremendously over the past 4 years. I want to share them with you, and if you can get a chance to read them, definitely do so. So the first one then is A Random Walk Down Wall Street. This is something that I've recently read. And the second one is A Millionaire Next Door. Really, really good book actually. Your Money, Your Life, something I haven't actually read yet, but I want to read, I'll be honest. And then The Intelligent Investor as well. So guys, 4 books to go and check out that are going to help you on your investment journey. 4 books that have helped me, one that I haven't actually read yet, but I'm going to be reading really soon. All right, that's it for today's video. I hope that if you didn't already fully understand, you now have a much better understanding of the basic principles of investing and your options when looking at buying stocks. If you've enjoyed the video, guys, please give it a like. And if you're not already, consider subscribing. I'll be making more videos weekly on investing and personal finance. See you next time.